Welcome to the Daily Update. This is being prepared Thursday, March 17th. Happy St. Patrick's Day. And we will look at the action in the market today and then see how things look for Friday, March 18th. And you'll have to excuse my voice a little bit. I seem to be dealing with some congestion right now. So I'll get through this the best I can without a lot of coughs and hacks and interruptions. And I'm also going to cover a couple of different areas that I talk about every day, but I haven't really dealt with, and that has to do with market valuation. I'm not going to go into a lot of detail. I'm just going to breeze over the top. And then it is my hope to prepare a more in-depth video that goes into a lot more detail and the whole mechanisms for how I reach the conclusion that I reach. I use somebody else's information. It's a useful website, but I'll go through that here in just a moment. So let's go back and look at Thursday's action. Compared to Wednesday, it was a pretty boring day. Rather subdued, not a lot of screaming and yelling, not a lot of bouncing all over the place, but it was still a positive day nonetheless. We did have a positive open. We kind of gyrated a little bit right at the start, and things were a lot more quiet, which can be expected. We've had a pretty intense week as far as the market goes, and even over the last few weeks, where we have these screaming up days and screaming down days, only really to not go anywhere. We still haven't necessarily gone anywhere, but the situation is improving. However, what I'm seeing is a potential overhead resistance point, and I'll address that as I go through the video. So as the day went on, we saw more sustained buying that was able to get us to R1, that's resistance level 1, and we kind of danced along that level for a while. And then as we went into the latter part of the session, prices were even able to advance above that. We moved above R1. We didn't really hit a particular level. We closed at the high, but what we did hit was the 50 period moving average. We ended up being up 1.23% for the day. Also, something to be a little bit concerned about is that volume was below average. Now, taken in the proper context, we've had pretty high volume the last few days and with everything that's going on. So for the market to kind of step back and take a breather is not necessarily a surprise, nor would I put a lot of excess concern into that right now. But it is just something to be aware of. Our technicals, they are looking much more positive, especially our oscillators. They have pretty much all switched positive now. The thing is the moving averages. That's the other area. And depending on your philosophy, depending on your strategy, your system that you use, if you base things on oscillators, you're looking a lot more positive right now. If you base things on moving averages, you're still waiting to see if price can get back to some of those moving averages and get above them, and then see the moving averages actually turn up. We still have earnings in the whole overall mix. We're still talking about inflation. That seems to be what everybody's talking about on a lot of different levels. Interest rates, well, we know where those are at right now as far as the Fed is concerned. So we'll just keep watching our economic reports. We'll keep watching what's going on in the bond market, in the corporate bond market, and just look at things that way. And then, of course, the whole geopolitical front, if you will. Still have Russia and Ukraine. That looks to be drawing out longer and longer. We still have issues with China, issues just inside the US, and just different things that are going on these days. So what are some comments from Thursday? We're still out of correction territory. With the advance, we're down a little bit over 8% from the all-time high, and I'll show you that here in just a moment. The technicals are turning positive and getting stronger because we had another up day. One positive thing is we were able to regain the 200-day exponential moving average. We haven't got back up to the simple moving average yet, but the exponential moving average calculates faster, so it's more responsive to price action. So it would only stand to reason that we would hit that one first. Then we're still bouncing up out of that extreme fear reading from the CNN fear and greed index. Prices still remain in a range. And then what I'm seeing, and I'll try to point this out on the charts, is we could be hitting a very short-term double top. Because look at this next line. We have climbed 6.02% from the low on last Monday, March 14th. We've climbed over 6% since that low. That is a monster move just to happen in a few days. So if the market is going to be a little exhausted, if it's going to bump into overhead resistance and pull back, that would not necessarily be surprising. We could do that. And as long as it doesn't get out of hand, we could still maintain a more positive outlook on the market. But it might need to take a breather. Okay, and then as I went to record, the overnight futures were down about 0.5%. On the slide I have, they're actually bouncing up a little bit. They were down 0.75%, then they were down 0.6%. Now they're down about 0.5%. So it looks like they're getting a little bit better. But don't be surprised if we see some pullback on Friday. The economic reports that came out on Thursday were pretty much taken as positive. And then the current market valuation, and that's switching a little bit because there are some areas that are still overvalued. When you're looking at the S&P 500 in and of itself, yeah, that's still overvalued. But when you compare the S&P with some other areas of the market, we're getting back more to a fairly valued situation. And I'll go through and talk about that a little bit. Because we had the up day, the ADX is continuing to weaken, and because it's a negative trend, we still have to default to that. The bias remains positive because we had another up day, and then the last number of days have been positive with the momentum. So let's go through the day's session, look at some things. There's some things that I'm taking out. There's a few charts that I don't include, at least for right now. I kind of do this on a day-by-day basis. As far as sentiment, we've bounced above the 20 level now, where we had bounced above that after Wednesday's session. Well, we got a little bit higher with the advance on Thursday. And here's the chart. This could portend to good things continuing. Now, doesn't necessarily mean that's automatic. It just means we were so pessimistic and we formed a bit of a base here that we just kind of had to deal with that. And so far, price is dealing with that by going higher. Can it go up a little bit and then come back down? Of course, that can happen. We're just kind of going with what we see here and then combining that in other areas at the same time. The VIX with the up day saw a decline on a closing basis, and we're actually breaking below these moving averages on the bar chart and showing a real decline in fear as well. It's still pretty high, but we're seeing it fall back a bit. The VIX of the VIX also is declining, looking at the bar chart as well as on a closing basis. Then the Ulcer index, and I'm only including the one chart now, not the longer term chart, because it's flattening out. And as long as things look more positive, this indicator will become less relevant. We really follow this closely when things are going down. If we start heading back down, we're going to pull this up and look at it really closely. But for right now, it's more sideways. Then one thing that was released on Thursday was the American Association of Individual Investors. They still remain extreme negative. That could be positive for the market. As I state, pretty much every time we get this report, individual investors tend to react instead of proact. If they see everything going down the tube, they're panicking as well. When a whole lot of them panic at the same time, a lot of times we go against that, using this as a contrary indicator to suggest that pessimism is so far negative that we probably could expect some kind of a bounce. This is suggesting that that's still possible. And the other chart that I have that shows the RIDEX bear to bull ratio, that hasn't updated yet. Another report that came out, this just shows the active money managers out there that actively manage ETFs or mutual funds. When this is going down, they are assuming less risky, or what is perceived as less risky investments. When this goes back up, and when we get down here to kind of the 30 range, because they're human beings too, and so they can overreact just like everybody else. We are still seeing a bounce as they are willing to take on more risky investments, which may be more growth oriented type things. So we're seeing some support from that as well. Looking at the sectors, we had an up day and all of the sectors were positive. Energy, which had been falling back the last few days, it came in the lead on Thursday. And utilities, which had also been doing well and have really been outperforming bonds lately. I have some charts where I look at that. I don't discuss that in the videos, but there are some people that are looking at more fixed income type of investments. And when do you get into bonds? When do you get into utilities? And so I look through those charts as well. But everything was positive as far as the sectors. Looking at it since the all-time high, energy is still way in the lead. Discretionary, even though it's recovering, is still the weakest sector. As far as inflation, I'm taking the BDI out for right now. It's just not helping us all that much. But I still am including the CRB. These are all of the commodities. This is the commodity index. And it had just been spiking higher and higher and higher, mainly as oil and heating oil, gas, all those things have been going up. Well, it fell back a little bit, but we saw a little bit more than 3% of a bounce on Thursday. Wheat also, after going parabolic, fell back. Well, it saw over a 3% rise on Thursday as well. Heating oil, same thing. Spiked up, fell back, had a 6.25% rise on Thursday. Gas, after spiking up, falling back, it had a 7.8% advance on Thursday. So a lot of these things that were causing fear in the market and causing people to freak out, they showed some weakness, which gave some support to stocks, but now they're getting short-term oversold. So we're seeing people coming in and start to boost those prices back up. Kind of a similar thing here with aluminum, spiking up, falling back, and then saw a 6.75% advance on Thursday. Our technical alerts, not a big long list like we had after Wednesday's session, but the euro against the dollar, because they've been going back and forth with each other, and the British pound's kind of messing around in there too. It's turning a little bit more positive against the dollar. It had a bullish MACD crossover. The NASDAQ did have some weakness. It fell below 13.4. The Dow went below 34,000. But then for the rest of the day, as prices advanced, you can see we had more and more positive signs. The S&P was able to get back above 4,400. The NASDAQ was able to bounce. Oil got back above 100 again. And the summation index, this is a chart that we look at every day. It crossed above its 20-day simple moving average. I don't put a moving average on there. I just kind of look, is it going up or is it going down? But this can be a technical alert that looks more positive because it's more of our intermediate term, where the McClellan oscillator is short term. Well, the summation index is intermediate term. Then this is kind of a new section, and this goes in conjunction with a website. And I have the address right here. I'll leave this slide here for just a second. It's just currentmarketvaluation.com. I ran across this site a while back. I look at it not every day, because sometimes these charts can go long periods of time without updating. Well, they take a whole mess of things together and then reach a consensus about the current market valuation. So what I did is I took a screenshot, and they've modified this a little bit. I do have some other videos on YouTube and Rumble that go more into detail. The data may be slightly out of date, but the theory behind them is still the same. So please look for those videos if that is interesting to you. I have, I think it's like a 7-part series where I go through each one of these models individually, and then I look at it together as a whole. Well, when we're looking at the yield curve, this is now down into the fairly valued area. And we've been watching that every day as well. As this falls, we might be getting into at least recession fears. Then there's a thing called the Buffett indicator. This is looking at the stock market value compared to GDP. It is still really high. So when it gets really red like this, that means it's extreme. When it comes back down to yellow, that just means it's overvalued. The PE ratio, which is something I look at every day, but yet again, there are different ways of interpreting this. It was getting extreme. Well, it's coming back down as well, but it's still overvalued. And then interest rates, which have been low, they have stayed fairly value. Margin debt, this is one of the new aspects that has been added recently into this model, where we really spiked up in margin debt as the market was going higher and higher and higher. People were willing to borrow money to buy stocks. Well, that gets to an extreme and people are overextended. And if we start to pull back, they're having to not only lose money in their investment, they're having to pay back what they borrowed as well. And that can really cause a lot of fear. It is now back down to fairly valued, where closer to the beginning of the year, it was just pegged at the top. The mean reversion, how far are we getting away from the average price? And that's kind of like the boom indicator that I talk about, that price gets too far away from its average price and it acts like a magnet. It pulls price back, or like a rubber band, it can snap back. We have been pegged near the top for a long time. Well, with the recent declines and with that moving average catching up just a little bit, it's gone back down into overvalued territory. So overall, this model says things are fairly valued if you take all of it together. But if you look at the stock market parts, the Buffett indicator, the PE ratio, margin debt, and mean reversion, we're still overvalued overall. Okay, intraday, let's look at the session. Just not a really drastic open from Wednesday to Thursday. Saw some initial buying. This dotted line is the unchanged level. We went a little bit positive, a little bit negative, a little bit positive. After the open got behind us, we were able to climb up to R1. And I made a mistake in yesterday's video. I called it S2 or something. I get the R and the S backwards quite a bit. And we camped right along R1 for quite a while, but then going into the close, we did see some buying right at the end, and we closed right at the high for the session. So we were up 1.23%, another good day. Then looking at this on the bar chart, this is what I'm pointing out here. See, we're coming back to where we were at before. Are we at a short-term double top? Look at what happened back here in February. We spiked up, came down, spiked up again, only to then fall after that. Is the same thing going to happen here? We've risen really fast to get right back up to where we're at right now. We're above the pivot, which that's, of course, is positive. But do we have enough strength right now to break on through to the other side? We could, but based on an over 6% move in what, 3 days, 4 days, the market might be a little tired right now. And with a Friday session coming up over a weekend with the things happening geopolitically, yes, it could happen. But these are just things I want you to be aware of in case we either go sideways to slightly down on Friday. Now, if we turn and just go back down, that's going to change the picture. But if we drift sideways, maybe a little bit higher, a little bit lower, this positive picture that has been developing won't change all that much. Then we're down 8.2% from the all-time high. So we're out of correction territory. Growth saw a little bit of an advance. Value saw a little bit of a decline. Then looking at the two indexes, growth is still underperforming value overall, and value is outperforming growth overall. The NASDAQ 100 wasn't quite as strong as the S&P 500. So that could be seen as potentially positive. The top 100 stocks weren't as strong, so that means it was more broad-based within the S&P 500. But I wouldn't read too much into that because it's just a little tick down. We're looking at the trend overall. Then, speaking of trend, we're seeing the ADX really start to decline. We're seeing selling pressure decline as well. We're seeing buying power increase. If we can get to the point where these lines cross, then that would be much more positive for the trend. Mass index, we're just looking at this, and I don't know, we didn't really get much of a signal here. We're going to just see if some kind of signal is generated soon. The Arun is not really changing right now because we still are in the upper end of this. Now this is going to sound weird. The upper end of the low range. Here we had the range here, then we went up here, then we came down here, then we went down here. We're kind of at the upper end of this lower range right now. And the Arun is looking back and saying, okay, these are recent prices that we've been at. So it's seeing a decline in selling pressure, but also seeing a decline in buying power. So it is still going flat overall. This is another thing that potentially could be positive. And so far, it looks like this is a legitimate signal where we crossed above. This is the Pring bottom fisher. This signal really didn't take us anywhere. But the signal that we're looking at right now, it crossed over and price has been advancing since then. As far as breadth, we're seeing that improve quite a bit based on price. We're above the moving average. Based on volume is improving, but we're below the moving average and the moving average is going down. The advanced decline ratio also looking at, I don't know if you want to read this into that, but it might also be showing some kind of a double top here. I just noticed that. I wouldn't read too much into that, but it is more positive overall. The new highs and new lows after giving us an up signal while we were going down has now been giving us a down signal as we're going up. Well, maybe it's finally starting to turn and go in the same direction. Accumulation distribution, because we had these strong up days behind us now, we're seeing a real advance in that, and we're above the moving average. Short term, we are back above, again, the 20-period moving average. That's when we've been down the way we have been. That's based on the moving averages that I use. That's the first moving average that we regain. Then, and I screwed this up in yesterday's video too, this is a moving average study with those stocks above their 20, 50, and 200-day moving average, both advancing. And again, on a short-term basis, we're getting to extreme positive, which may suggest some kind of short-term exhaustion. Here is our spaghetti chart where we have come back above this gold moving average here. That's the exponential moving average. And we're right at the 50-period moving average. So that is now acting as resistance. But are we going to come back down from that in Friday's session, or are we going to be able to break through that? That's kind of the question. MACD is positive and going higher. Short-term oscillator based on price and volume is positive. The McClellan oscillator, this also may point to some short-term exhaustion. We've been coming up out of the low set earlier in the week, and we're getting an extreme positive reading. Same thing with the Stochc RSI, pegged, overbought right now. Williams percent R, pegged, overbought. Force index really showing some improvement, but starting to get to an extreme positive reading. Then the rate of change, this is what's interesting too, is when we had the up days earlier in the week, this was pegged near the top. Well, it's actually slowing down a little bit. We saw not the same intensity of advance on Thursday. So this is coming off an extreme reading. And then looking back 5 days, yeah, we're getting close to the point where we're showing an extreme positive reading. Intermediate term, we are at the 50-period EMA, exponential moving average. If price is going to go higher, we first recapture that. Then we try to go after the simple moving average, stay above that, and then potentially see these moving averages turn up. Or are we going to hit this? Because 50 is what a lot of people use. And if they're going to sell, and if they see any kind of weakness, that may fuel some kind of a pullback from where we're at right now. PMO, positive. Overall, based on price and volume. And the decision point signals, they still haven't updated those, so I'm not even including that today. The other PMO study, those that are rising is starting to get extreme positive. Those that are giving buy signals, that's increasing nicely and showing some strength. Those that are above zero, also turning up. BPI also showing some follow through strength, which is what you want to see as we see prices going higher. That just shows some more internal strength inside the S&P. And then here's the longer term view of that. Moving average rainbow, again, our moving averages, because they lag, they're lagging indicators, they don't react as quick. So we're just kind of trying to come back into the bottom of the rainbow right now. Stochastics, short term, extended. Intermediate term, positive and getting near an extreme reading. And longer term are also turning up. Here's the summation index, up and going higher based on price and volume. All of our oscillators now are positive. And so this is why I say the oscillators, which are, they change quicker than the moving averages, especially when we're far away from the moving averages. Well, these oscillators are picking things up as being more positive across the board. Vortex has crossed over positive, but a little bit of a decline on buying and a little bit of an increase with selling on Thursday. RSI is above 50 and rising. CCI getting to an extreme positive reading on 14 points. 20 periods getting close to an extreme positive reading. Trading systems, Elder continues to be green, and you're going to love this. The SAR has finally switched back to positive. We had been going higher only to have it give us negative signals. Well, it finally caved and we have a dot underneath. But be careful, in choppy markets, this can tell you what to do at exactly the wrong time. This is a very good trending indicator or trending system that you can use. But when we start chopping, it can tell you, it can really hurt you and see some real big drawdowns in the process. Our different charts, the Heiken Ashi, see where we're coming back here to a potential very short-term double top, but it is showing some improvement. The Kegi is still black and going higher, so that's positive. Renko is not really picking up things because it's seeing recent prices not too long ago, so it's still a little bit more negative, but the 3-line break did pick up Thursday's advance, combined it with Wednesday's, and this is looking better. Equivolume also shows that we could be getting near some short-term resistance. The point and figure, there's no signal that's generated, but with the advance on Thursday, we saw another green X drawn. Fibonacci, we are getting close up to this 38.2%. And can we get above that? Or this is another potential resistance level that may suggest price could decline, at least in the short term. Looking at our long term, we are still below the moving averages. So that is still negative overall. The mega stocks continue to be below the moving averages, even though they have seen some recovery this past week. But we've got to get back above these moving averages for that to look more positive. The special K, which takes longer to shift, it's just pretty much flat right now. And here's the longer term view. We're looking better with our longer term moving average study based on 50 periods. Yeah, we broke above and we're getting more positive. The 150 period moving average also breaking this downtrend. And with the 200-day moving average, we were able to break slightly above this downtrend. Broad market studies. S&P, this is kind of looking a little concerning, this kind of horn thing sticking out here. Mid caps kind of showing the same thing. We're seeing some potential short-term resistance. Same thing with the small caps. So don't be surprised if the market picks up on this, and with it being a Friday and all the other things that I mentioned, we might see some pullback on Friday. The FANG stocks were up, not as strong as they had been, but still continue to move a little bit higher. ARK was also up 4.81%, so is enjoying the recovery that we're getting. The Dow, it was able to stay above the pivot, and it's also coming up to its 50-period moving average as well. The small cap have broken above the 50-period moving average and is looking a little more positive, but look at where we're at right now. Look at all of these highs, either intraday or right now we have a closing high right here. A lot of people are seeing that. Then mid caps, not so much of a double top across the board, but we did get above the 50-period moving average. NASDAQ, which is showing more weakness, we got right back up to the pivot. So can you see kind of how some things are all coming together as far as potential resistance with a market that might be short-term exhausted? Now, that could be a completely wrong observation. We could just blow through that and scream higher. We just have to go with what our charts are telling us until price dictates otherwise. NASDAQ 100 just below the pivot, but is showing some improvement. The VIXN, as price has been going higher in the NASDAQ 100, the VIXN has been declining. NYSE broke above the pivot and getting close to the 50-period moving average. The S&P 100 underperformed. That's kind of what we're seeing with the NASDAQ 100. So it's just showing that, at least on Thursday, it was more of a broad-based advance. The Wilshire also was able to get above the pivot and not too far away from the 50-period moving average. There's some erroneous data here. We didn't have that big of a swing, so something was wrong in that. China, which has been bouncing a little bit, is still down overall. But if you take all these, the emerging markets, Europe, Japan, look at what's holding up the best right now. It is the U.S. market, the S&P 500. So, and the U.S. market tends to lead the other world markets. All stocks also were up over 1%. Some other areas to look at, the dollar's been falling back, but is still in the overall uptrend. And here's the weekly chart as well. Oil spiking up, dropped below 100. Now we're just slightly above. We're at 101.65. Gold, same thing. Spike up, come down, bouncing back. Spike up, come down, bouncing back. Spike up, come down, bouncing back. Silver, spike up, come down, bouncing back. So you see a lot of these moving, these other markets are moving in more uniform manner, just like you're seeing a lot of the stock market indexes moving. We're kind of hitting resistance all at the same time. And palladium, spike up, fall back, bounce. Bitcoin has been able to stay slightly above 40,000 for right now. Bonds, we're still watching this closely, even though it bounced up a little bit. We're waiting to see, are we going to drop down to this red line? Looking at the 30-year fib retracements, we're starting to break above the 50% retracement at 2.5%. We have broken above 50% with the 10-year, and we're getting up to the 61.8% retracement at 2.192%. So what's interesting is, I didn't really point this out, but when you look at the 10 and the 5, they had the identical yield after Wednesday. So it's like, okay, do you want to buy a bond? And you'll get the same yield if you buy a 5-year or a 10-year. Well, duh, you want to go with the 5-year because you're tying your money up for less. Those things, unless they switch and go inverted, usually don't last very long, and they work themselves out a little bit on Thursday. But we're seeing, at least in the longer term, where interest rates are going up, this is trying to settle out between the 10 and the 5. The 2-year did decline a little bit, and we saw a decline in yield on the 3-month. But across the board, looking at world indexes, we are still going higher, which should not be surprising. Bonds continue to be in a downtrend, even though they bounced slightly based on price. Corporate bonds bounced up. The yield is getting around 3.56%. And here's the longer term view of that. Junk bonds have also been bouncing back up. They tend to more correlate with the stock market. Our relative studies, we're seeing kind of the same thing that we've pointed out in other markets. Gold is breaking out, bouncing back. And with the advance in stocks, we're not seeing this really advance, but it's still, gold is still outperforming the S&P on a short-term basis. This shows the energy against the S&P bouncing back or bouncing down a little bit, but not showing the bounce that we saw in the commodity because the S&P also advanced. Then looking at growth versus bonds, we're getting back above this moving average. Okay. Then looking at tech against the S&P, it's bouncing back up, but we're still below the moving average. However, the moving average continues to go higher. Then looking at tech against the 10-year yield, tech has been underperforming the rise in interest rates, where here interest rates have been outperforming tech. The discretionary against staples is just showing that even though we're still in an overall downtrend, discretionary has been outperforming more short term. Then the S&P against interest rates, with the really strong moves that we saw, the S&P is outperforming the rise in interest rates right now. And then this is still that scenario that might be turning into something legitimate, because we bottomed down here in small caps. They started to bounce before we saw this bounce in the S&P. So that there may be something to this signal. At least so far, it looks that way. So what's our outlook for Friday? We're out of correction territory. We're in an intermediate term range. We're still in earnings season. There's still a battle between growth and value. We have existing home sales coming out on Friday. We have the same political events, Russia, Ukraine, China, and anything else that might happen in any one of those environments, or something else can always happen too. Then some of the different scenarios that we're kind of looking at right now, the reversion to the mean. Before the Fed raised interest rates, before we saw this real strong up move this week, the trend was negative. Are we going to revert back to the previous trend? Is this bounce just to wear off extreme pessimism? Right now, you could make a case for either side, but based on our oscillators, you would say, no, this is not like a dead cat bounce necessarily. Looking at our moving averages, yeah, they're still far above where we're at right now. So you could say this might be a dead cat bounce. Is there a possible base forming? Our oscillators are positive. We were able to regain the 200-day, but we are at the 50-period moving average as resistance. Very short term, we're looking at a possible double top. We have short-term overbought indicators. We have resistance where we're at. And then, as I said before, as I started to record, the S&P futures were down. But when I record this, it's many, many hours before the open. And so anything can happen. That's why I don't put these bullet points on here all that much. So the S&P is mixed and in a range with a more positive slant to it. The short-term bias is positive. The intermediate term is positive. If you base things on oscillators, if you base things on moving averages, it's more mixed right now and could be still negative. And then long-term, we're still negative as long as we stay below the longer-term moving averages. So thank you. Have a wonderful Friday. And if you're into the March Madness, if you follow those things, hopefully you'll find some entertainment from that. And we're having some spring training games start up in baseball. So get away from this for a while, just enjoy yourself. And I will prepare another video after Friday's session, and then also the weekly video over the weekend.